Hey everybody, it is Mark Coe for the 20th of April. Want to continue to focus on this swing. Call me the swing man for all you want. Here's what I want to look at. Looking at a currency today, euro dollar. What did euro dollar do today? Had a pretty impressive start to the day. Kind of petered out towards the end. But here's what I want to look at. This idea of the swing. Position yourself to benefit from the swing. And by doing so, you're giving yourself the greatest upside while controlling what your downside is. And let's think about how that works out. So let's look at euro dollar from the week. What do we have coming into the week? So this is Sunday night. This is how your chart looks Sunday night. This is Friday's close, 14th of April, right? Friday's close. You have a bottom edge right around this 106. And the reason I'm pulling 106, I'm using this level from the 14th of March. Tested again early April. We did eventually see lows at 575, but came right back up to hold this bottom edge support. So that's the edge I'm using. That's this 0600 support I'm using. Then you have some top edge in here around 680. That comes from the breakdown in early April. Now here's what I want you to think about. Position for the swing. If we're going to get long this euro market, where's the first swing you're going to be looking for? Where's the first movement to the top side you're going to be looking for? You're going to be looking for 680. What's the downside you're going to be looking for? If the market gets below that 575, you know you're going to go test 530s. That's what you're going to go see. But until it does, that's the support you're using. So in this idea for positioning for the swing, what you're looking to do is get yourself in a position that if this market swings topside, you have that as your risk level. You know where you're wrong. There's a huge key, and I've been seeing this a lot with some of the email communications I'm getting. People saying, I don't have the confidence to stay in a trade, or I take it off too early, and then it does exactly what I do. Shame, right? The idea is that if you do the work until the market proves you wrong or some elements of that trade are not still in existence, why would you take it off? Because you're scared? That doesn't make any sense. Scared money's not gonna make it in this market. This is a big boy market. You have to start to think about it from the standpoint of what do? You manage risk. That's what you do. You manage risk. So if the risk makes sense to be long side around 106, if nothing changes elements-wise, why take it off? Allow yourself that swing. If something changes, that's different. You should react to those changes. But it shouldn't be about, well, I got scared. Then you probably shouldn't have the trade on the first place. But some people tend to get so short-term focused, they're losing the bigger picture idea, which is that, look, I want to be positioned for a swing higher in the euro. How can I get positioned? I can get positioned on a pullback. Think about it from the opposite side. Say you're of the opinion that euro's going to trade lower. You can buy into any longer term analysis you want, and you can say, yeah, euro's going to trade lower. Fine. Where should I be short euro from? I should be short euro from a top edge. And that's the swing that you're looking for. So even if you have the idea that I want to be short euros, you have to be looking at that top edge to explore that short euro side of it. But in looking at the long side of it, that is your swing component. That's your 80 ticks at the top side. What is the next level you'd be looking at above 680? You're going to be looking at that 775. That was the resistance point coming into Thursday. So let's see how that plays out in the market coming into the week, right? So we have 600 to 620 support. You have 680 resistance. Those are your first levels. So long side, you're going to be looking swing to 680. Short side, you would need to see a break below 575. You never get a break below 575. There's your first swing, right? Swing level to level. That's all it is, level to level. That's 80 ticks. What is one standard lot in FX? That's $800. One position, standard lot, right? That's 80 ticks. What's the next swing you'd be looking for? If you get above your 680, you're looking at this 775. That is your swing. That's your next swing. Does it go there immediately? No, it consolidates. It spends a little time inside the zone, but you're supported at this zone. Here's your move right here. It occurs on a Thursday, so it took 3 days. But you know the entire week what you're focused on. You're focused on swing to swing. What's the next move? Right? So we're looking at it from a standpoint of saying Euro has come up to this 775, right? This is the level all my subscribers had today. We had 775 as resistance. We traded 778. 778 was the high. So 3 ticks away. That was how good the level was today. And I can show you it across markets. I can go into euro. I can go into dollar yen. Dollar yen, my resistance was 09.45. Where did the market trade? Traded 09.49. So the idea is these levels work. These levels work. Does that mean you can't blow through a level? No, but what it means is that you know where you're wrong, right? And so the idea becomes look for the swing, position for the swing. I'll show you a market that didn't have necessarily a directional bias, the E-minis, the S&P futures, right? The S&P futures had a nice day higher today. Did not have this positioned as a directional trade. Just basically said, look, we're in this range. It's a wide range, and I have it pegged from this like 20. I'm actually using more like this 2367 to 2324 on the bottom, but it's a wide range. That's 40 points of range. It's 40 points. So it's not directional in nature that says at 2337 I want to be long. What it means is that any positioning off the bottom targets a full swing back to the top. That same logic says any positional short off that top edge targets a move back to the bottom side. So think about how the S&Ps work, or how any market works. On any movement higher into that top edge, my risk becomes smaller and smaller, while my potential for a full swing back to bottom edge becomes bigger, right? And that's the idea of don't trade in the middle. Trading in the middle simply says, I'm going to reduce my overall upside for a correct swing. Chasing the momentum, it's a different beast. It's a different focus. Chasing the momentum says I didn't have the foresight to come in and look for this market at a lower point, but now that it's started to move, I'm going to jump on the train. And there are times to jump on the train, but you have to think about it from the standpoint of even if I'm jumping on a momentum train, how do I do it at an edge? How do I give myself an edge? And if you will continuously play from an edge, you're going to give yourself a much better chance to be competitive in this market, right? The big money is going to eat you up. It's going to take your money. It's going to take your lunch money on a daily basis if you come in and play it from the standpoint of watching 20 points go by in the S&P and then try and buy the top. That's not smart money management. It's not planning of your scenarios. So continue to look at it from the standpoint of I want to find the swings. I'm going to position myself to take advantage of the swings. And when those swings work out, I'm going to have it trade accordingly. And that's really the idea. Sterling yen, I keep going back to the sterling yen, euro yen. Sterling yen and euro yen are both in model trade longs right now. They've been in long pounds, long euros against the yen, so they've had short yen positions. They've been long for a few big figures now in sterling yen and a little over a big figure in euro yen. But the idea is not to chase the momentum higher. It's to find edges if you're going to buy that pullback, right? It's to find an edge. It's not to chase that momentum higher. So sterling is experiencing an up run now, and you're seeing it in the crosses. But the idea is not one of chasing momentum. It's playing from strength, which means you decide what levels you trade. So I hope everybody's having a good week. I hope you're taking part in some of these moves. As I said, keep working on diagnosing the swing, and we'll talk to y'all soon. Cheers.